Welcome to the channel where we help you decode the future of investing and technology. If you want to stay ahead of the biggest investment trends before they hit the mainstream, make sure you hit the subscribe button right now and turn on the bell icon so you never miss a new video. Today, we are diving deep into one of the most exciting and challenging opportunities of the next decade: the rise of humanoid robots. We are talking about a future where 1 billion humanoid robots could be working around us by 2035. It sounds like science fiction, but the investments happening right now are very real. And today I'll break down the facts, the numbers, the opportunities, and the risks, all in simple terms and with actionable ideas you can use. First, let's look at why humanoid robots are being developed so aggressively. Labor shortages across manufacturing, logistics, healthcare, and even domestic work are creating a huge gap. AI is advancing rapidly, and physical robot technology is finally catching up. Goldman Sachs projects the humanoid robot market will reach $38 billion by 2035, while ARK Invest suggests the opportunity could be as big as $24 trillion long term. Morgan Stanley estimates that humanoid robots could replace the wage impact of about $357 billion by 2040. Even if only a fraction of these forecasts come true, it's clear we are looking at a huge economic shift. Let's talk about the leading players. Tesla's Optimus robot is being designed for dangerous, repetitive, and boring tasks. Tesla plans to integrate Optimus into its factories first and then sell it for home and business use at a target price between $20,000 to $30,000. Figure AI, another big player, already raised $675 million in its Series B round and is reportedly seeking another $1.5 billion at a nearly $40 billion valuation. They are working with BMW to pilot humanoid robots on real car assembly lines. Agility Robotics' Digit Robot is the first humanoid robot commercially deployed. Right now, it is working at a Spanx logistics facility managed by GXO. These companies are not just in research, they are building real products that companies are starting to test in everyday environments. But building and operating 1 billion robots comes with gigantic energy needs. A single robot like Tesla's Optimus consumes around zero point 0.3 kilowatts per hour. If you imagine 1 billion robots running for 16 hours a day, we would need about 5,800 terawatt hours of energy every year, about 23% of today's global electricity usage. This will massively boost demand for renewable energy. Companies in solar and wind energy like NextEra Energy, Brookfield Renewable, and Ørsted will be critical winners. Smart investors should watch companies building energy infrastructure and grids because without enough clean power, the robot revolution simply can't happen. Now, let's get into batteries. Today, robots run on lithium ion batteries, but future models will need lighter, safer, and faster charging batteries. This opens major opportunities in companies working on solid state batteries like Solid Power, QuantumScape, and Solidion technology. Lithium-sulfur batteries could be another game changer, offering higher energy density and cheaper costs. Investing early in companies developing next generation battery chemistries could pay off massively in the next decade. Another actionable insight is to watch the picks and shovels suppliers, the companies making the motors, gears, sensors, chips, and magnets that all robots need. Companies like Harmonic Drive Systems and Nabtesco dominate the high precision gears market. Schaeffler and SKF are major players in robot bearings and motion technology. Nvidia dominates AI training chips today, but also watch AMD, Intel, and startups like Hilo and Seema AI that are building efficient AI processors for edge robotics. These component suppliers don't depend on one single robot company winning. They benefit no matter which brand sells more robots. Rare earth minerals are another critical piece. Robots use high torque motors that require neodymium magnets. MP Materials in the US and Linas in Australia are leading non Chinese suppliers. If demand explodes, these companies could see enormous growth. Lithium mining companies like Albemarle, SQM, and Rio Tinto are also vital because every robot needs a powerful battery. Copper demand will soar too because robots are packed with copper wiring for motors and electronics. Companies like Freeport, McMoran, and Southern Copper could be strong plays. Humanoid robots will first show up in warehouses, factories, and logistics centers. Amazon is already testing Agility's Digit robot for handling totes. BMW and Mercedes Benz are using Figure AI and Aptronic robots on assembly lines. Early investment opportunities exist in logistics and manufacturing companies that adopt robots early, improving their margins and cutting labor costs. Watch companies like GXO Logistics, Amazon, BMW, and Mercedes Benz. These companies could become case studies in successful humanoid robot adoption. Of course, this future is not guaranteed. Major risks exist. Today, a humanoid robot costs over $100,000. For mass market adoption, prices must fall below 50,000 and ideally closer to 20,000. This requires massive scaling of manufacturing, and no one has proven they can mass produce robots at car like scale yet. Safety is another issue. Robots working near humans must meet strict safety standards, and regulatory bodies are only just starting to write the rules. Companies that invest early in building safe, certified robots could have a major first mover advantage. Public acceptance is another hurdle. In industries like healthcare and elder care, people might resist having robots providing personal services. Robots will need to be designed to be not only functional but also emotionally acceptable. Companies like 1X Technologies and Sanctuary AI are focusing on making robots that are safe, collaborative, and human friendly. Investors should watch how companies handle human robot interaction challenges because technology alone won't guarantee success. Let's now discuss data. Humanoid robots will generate massive amounts of data, vision data, motion data, performance data, and they will need cloud systems to store, analyze, and learn from this data. This will benefit cloud service providers like Amazon, AWS, Microsoft Azure, and Google Cloud. It will also drive demand for companies building smart sensors, edge AI chips, and data analytics platforms. Firms like SIFT and companies offering specialized IoT and robotics cloud services will be critical enablers. Another overlooked opportunity is in maintenance and repair. Robots like cars will need parts, repairs, and upgrades. This creates a whole new service economy around robot maintenance. There could be startups offering robot mechanics, automated diagnostic systems, spare parts logistics, and remote troubleshooting. Investing early in companies creating robot service networks could be a very smart move. In summary, investors should think in terms of the full humanoid robot value chain. You can invest in robot manufacturers like Tesla or private firms like Figure AI. You can invest in critical parts suppliers like Harmonic Drive, Nvidia, and MP Materials. You can invest in battery innovation, cloud data providers, and renewable energy companies that will power the billion robot future. You can even invest in end user companies like Amazon, BMW, and GXO that will benefit first from robot adoption. A diversified approach across these layers reduces risk and captures upside across the entire ecosystem. To be clear, reaching a billion robots by 2035 is a very aggressive goal. Realistically, we might see tens or hundreds of millions first, concentrated in factories, warehouses, and maybe large retail chains. But even partial success would reshape huge industries, disrupt labor markets, and open massive investment opportunities across energy, materials, technology, and infrastructure. Thank you for joining me for this detailed breakdown of the billion robot future. If you found this video insightful and you want to keep learning about where the next big investment waves are coming from, Don't forget to hit the subscribe button and turn on notifications. It costs nothing and helps us keep bringing you high quality research and analysis. Thanks again for watching, and I'll see you in the next video.